Remember when you were a kid and you got your report card? And there were those times you couldn't wait to run home and show your parents how well you did and maybe be rewarded for it with money or something else? Then there were those other times when you conveniently lost your report card because your grades were a little less than impressive. Good or bad, at that time in your life, grades meant everything. Well, I'm going to let you in on something. Even though you are an adult now, there is still a grade that you need to be concerned about. But instead of an A, B, C, D, or F, it's a 3-digit number, a credit score. A credit score is a general purpose score model that tells lenders how much of a credit risk you are, and it can have a huge impact on your life. Whether you're applying for a car loan, a home mortgage, or a credit card, one of the first things a lender will do is to check your credit score to see how good your credit is. It's calculated from your credit report, and it can determine whether or not you get approved for a loan. But lenders also look at a lot of different things when they make a credit decision, like your income, how long you've worked at your present job, and the kind of credit you're requesting. Nevertheless, your credit score is an extremely important part of the equation, and it is something that you can control. Just like back in the day, it's a grade that you earn, and there are consequences for that grade. Back in 1960, Bill Fair, who was an engineer, and Earl Isaac, a mathematician, developed a mathematical formula and formed a company named FICO, Fair Isaac Corporation. The proprietary mathematical formula came to be known as a FICO score, which is simply a brand name for a credit score. And since 1989, it's been the scoring model used in the mortgage industry. The FICO score was designed to reliably predict whether a borrower will become more than 90 days late on his or her mortgage loan. The score is calculated on a sliding scale. It ranges from 300 to 850, where higher scores indicate lower credit risk and vice versa. Just like a grade in class might be comprised of part homework, part participation, part test scores, your FICO is calculated in a similar way, with different parts and weights including your payment history, amounts owed, length of credit history, credit mix in use, and new credit. These scores are offered through 3 national credit bureaus, Equifax, Experian, and TransUnion. And these companies maintain the largest databases of lending and consumer credit information. Just as teachers grade differently, credit and FICO scores can vary between the bureaus because each of them collect and work with slightly different information, and they don't share information with each other. That's why it's very important to check your credit report and your credit score with all 3 bureaus to make sure that it's accurate information and that it is correct. And did you know you can check it for free once a year? Just visit annualcreditreport.com. However, warning, the credit score on that report will vary from the credit score your mortgage lender sees. And there are a variety of reasons that this happens. We actually made a separate video just on that topic, so be sure to watch that one as well. Your grade, or credit score, will tell you how successful you will be in securing that credit line or mortgage loan that you may be seeking. So folks, in a nutshell, that's what a credit score is. If you work hard today and manage your credit well, you'll get a good grade, and lenders will reward you for that.